All of us would love to have a time machine so that we could either go back in time or into the future to know the answer to the million-dollar question. When is it a good time to enter the market? Well, whether you are a newcomer or a seasoned investor, you may have asked yourself this question more than once. I remember asking myself this plenty of times in the past. There's always the fear of losing money either by entering right before the market dips or exiting just before a bull run. This fear is real, guys, especially when it comes to digital assets that promise high returns, but they also come with extreme risk and volatility. So, how do you time the market? Don't you worry, in this video I will explain exactly how you can enter the market, what is dollar cost averaging, how it works, and how you can use it to safeguard your investment. Well, the most effective way to enter the market is to invest in cryptos periodically with a fixed amount. This investment strategy is called dollar cost averaging or DCA, and it focuses on time spent in the market over timing the market. So, what is dollar cost averaging? Dollar cost averaging is a tried and tested investment strategy. Trust me, it always works in a bear market. In DCA, the investor decides the total investment amount and purchases a target asset in intervals. The purchases go on regardless of the asset's price and they continue until the total investment amount is used. This can help you minimize the impact of volatility and eliminate the need to gauge the right entry point. Okay, how does dollar cost averaging actually work? Well, let's take a simple example to understand how DCA works. Assume you have decided to invest $10,000 in a token currently priced at $100. At this price, you will end up with 100 tokens. Now, let's say you decide to spend $10,000 over 5 months. You invest $2,000 every month and to your surprise, the price starts falling within the following months. It goes from $100 to $85 to $70 to $90 and then back to $100. The total number of tokens you'd have would be 114.32 rather than 100 if you had invested all of it in one go. You'd end up getting more value for your money. Now, the question is, should you use dollar cost averaging? Well, if you are a beginner or at least bothered about the technical aspects of the market, you must DCA. And if you're planning to invest in the long term, even better. But why long term? Because you would have to stick to an investment schedule and invest a fixed amount regardless of the price. However, if you opt for this strategy, you cannot doubt yourself and you can absolutely not get greedy. Now, can you apply dollar cost averaging to the crypto market? Well, yes. DCA is the best strategy for cryptocurrencies since they are more volatile than any other asset class. With the market undergoing wild price movements almost every month, it's not easy to predict any price movements. DCA would help you average out your returns and take advantage of market dips in such cases. To start DCA, decide the total amount you want to invest, choose the token you want to target, and invest small amounts over a specific time. Unless you have signed up with an international exchange, you would most likely have to place the trades manually. Do note that this strategy works to your advantage when the prices are falling, but using DCA investment strategy during a bull run might cause you to lose a lot of money. Because you will be doing more transactions, keep in mind that the transaction fees also increases with DCA. Therefore, it makes sense to keep an eye on these fees and ensure they are not pulling you back. However, since DCA is a long-term strategy, the fees that you will pay will be offset by the duration of your investment and its profitability. Guys, investing using DCA could also at times mean that you might miss out on large gains if you only had invested a large sum. But then again, huge profits require technical knowledge, predicting prices and timing the market correctly, which is not everyone's cup of tea. Keeping these things in mind, DCA is definitely a safer way to enter the market. Guys, one more thing before we go. I will be dropping new videos just like this every week. If you like this video, then hit that subscribe button and don't forget to hit that bell icon so you'll get notified when my new video drops. Crypto is my passion and I love making these videos for you guys. I would highly appreciate it if you could give this video a like and share it with your friends and family who can benefit from this investment strategy. For now, my name is Adnan Arif and it's been a pleasure taking you through the best cryptocurrency investment strategy in a bear market, dollar cost averaging.